Hi, everyone. Thank you so much for joining us here today. We're definitely very excited to kick off our next panel topic, which is the evolution of digital banking. I'm just going to get my, where is my, there we go. Hold on. There, I'm just going to share my screen. All right. So exciting. All right, so today's topic, again, the evolution of digital banking. So I always like to start off a little bit about who we are at the Canadian Blockchain Consortium. Oh, sorry. And of course, technical difficulties have to happen. So we were founded back in 2017 by this amazing woman. Her name was Suzanne West. She was kind of like the brainchild behind our Alberta Blockchain Consortium, which has recently been renamed as the Canadian Blockchain Consortium. And we really focus on education, advocacy, and community building, not just in Alberta, but throughout Canada. So one of the ways that we really love to engage with this is through our webinars. We'll be getting into them pretty steady starting in 2021, since we're not able to host our in-person events still. I know many of you who've joined our in-person events miss the charcuterie and the wine and the camaraderie. We really, really do too, but the best way that we can stay engaged with you right now is via webinar. But the second we're able to, we look really forward to connecting with everyone again. Of course, our wonderful consortium, we're a not-for-profit, so we engage in not just education, but also charitable activities, hosting large-scale events. We engage in different committees. We have FinTech committees and legal committees and industry committees, and we're constantly learning and growing and figuring out how we can engage and create the best value to our community. And some of the amazing support we have is through the membership of our organization. So I want to thank you to all of the members that we have here. A lot of them have been with us since day one, and we could not be continuing to do this without them. For today's event, we're really, really excited to thank our sponsors, Bitcoin Solution, as well as McLeod Law. Bitcoin Solutions, and you're going to hear from their absolutely amazing powerhouse CEO today on our panel, but they offer you a really convenient and secure way to get Bitcoin and other cryptocurrencies through their ATMs. They want to help you to discover the benefits of using cryptocurrencies and help it make it easier for you to buy them and sell them. And I really love this quote from Adam. He's like, his goal is to bring Bitcoin further into the mainstream and educate everyday people about the benefits of this decentralized currency. And we also have Matthew Burgoyan, who's you're going to be hearing from. He's a partner at McLeod Law, and he's known as the Bitcoin lawyer in Canada. Absolutely amazing human being. And McLeod Law actually started back in 1980. It's just like a small little two-person firm, and they are one of the fastest growing law firms in Canada right now. They have over 55 lawyers. They offer legal services in over 40 different areas. They're in the business of helping people. Their size and their depth of experience means that every client engagement is scaled accordingly for an effective result. So thank you so much to our amazing corporate members who are supporting this panel today. Of course, we love engagement. The more engagement we can get, the better. We will have a live poll. We'd love you guys to take it, give us a little information about yourselves, about topics you're interested in hearing in. We will have a Q&A. Please, when we get to the point of the Q&A, put your questions in the Q&A area. It's a lot easier for us to read from those as opposed to going through the chat, but definitely engage in the chat as much as you like. Of course, if you like the content that you're receiving here today, engage with us on social media. We'll keep you up to date on any interesting articles, information, any of the events that we have coming up. So it's a really great way to keep up to date on the different things that we're doing. So I'd like to introduce to you our incredible panel members for today. And each one of them has some pretty incredible insights on not just, decentralized finance, but so much to do with this blockchain and cryptocurrency space. So first off, I'd like to introduce you to Adam O'Brien. Adam is the founder and chief executive officer of Bitcoin Solutions. Adam believes that decentralized finance is the essence of consumer and individual freedoms. When understood and utilized properly, it offers full control and truly creates a borderless financial world in the same way the internet has created the borderless communication world. A borderless and owner-controlled financial system is the only true path to financial sovereignty. Sorry, 1 second, guys. I have to get off of this screen share. It's not loving me right now. Awesome. And then we also have Alex McDougall. He is the co-founder of Bicameral Ventures. So Alex loves this space because he believes if we do this right, we can create a framework for extreme flexibility and lend and borrow at any term, in any currency, at any size, with any level of direct collateral for any period of time, even on a block by block basis. This ability to customize at a low scale opens up entire yield as a service or capital as a service industries of bespoke solutions tailored for anyone looking for yield or anyone looking for capital. In a world where perpetual 0% rates on savings and spiral exclusion and inequality, this type of open framework and flexibility is the future for anyone looking to optimize assets. And we have Haley Thomas. He's the head of Canada for MetalPay, and Haley believes that DeFi can empower an individual to be the master of their own financial destiny. In his role at MetalPay, he helps build tools and platforms that give users control over their own funds. And last but absolutely not least, we have Matthew Burgoyan. He is a partner practicing business and securities at McLeod Law and is the head of the firm's cryptocurrency and blockchain group. He advises clients on a wide range of matters, including initial incorporations, organizational matters, mergers and acquisitions. Matt also provides securities regulatory advice, including legal options specifically tailored to cryptocurrency companies. And he really loves this topic of decentralized finance ever since the summer of 2013 when he actually discovered Bitcoin. So we're going to have kind of like an open flowing conversation today. We have some really great questions that we're going to be asking our panelists. And you guys, I'm really excited to have you guys here today. Thank you again so much for joining. So my first question, and whichever one of you want to answer it first, go for it. So for most people, the concept of decentralized finance is still a mystery. Even as applications and adoption rates grow in major industries, what are some of the core principles of DeFi, and how does it differ from our traditional financial sectors?
Happy to kick it off. No, I think this is thanks a ton for hosting, Koleya. I'm really excited to be on here. I think we got an awesome panel, and what you guys are doing for the industry is fantastic. Obviously, we all want to get back to being together in person, but doing things like this virtually is a way to even add more efficiency and do more stuff in a short period of time without the physical limitations of actually traveling. And I think that's not a bad way to start conceptualizing what the decentralized finance or the digital banking world looks like as well. It's a way to take a whole bunch of the benefits of what we tried to create with our existing financial world, which at its core, when we started doing this thousands of years ago, was just to find people with capital and people who needed capital and connect them. That's all finance was. That's all finance should still be. And we've sprung up all of these challenges and all of these frictions and all of this infrastructure around it. And really the whole purpose of digital and decentralized finance is to sort of take it back to that initial core principle of efficiency, transparency, real-time nature, liquidity, and ultimately creating financial services on kind of a relationship bias-free manner. So it's a lot about just getting back to the core basic fundamentals of finance. And we'll talk a bunch today, I'm sure, about some of the DeFi headlines that we hear and all the casinos and the fairy dust and all of that crazy stuff that's going on. But at its fundamentals, it really is more about simplification than making things more complex.
Yeah, I think, Alex, that was awesome. I want to build on that a little bit and kind of introduce the idea of trustlessness, or not needing to trust the opposite party. I think that where decentralization can come in is in the ability to trust the math and to be able to trust the platform that is rooted in math, basically, without having to trust the individuals on the other end. We're all very used to trusting individuals, whether it be our financial advisor or our banking partner, or somebody else, the lender. There's a lot of trust happening right now. And what that leads to, unfortunately, is a lot of people getting taken advantage of. And where decentralized finance can kind of go is to remove that trust or the need for that trust, and kind of root it in the actual system, which I think is a massive benefit, and one that we haven't really seen right now.
I would definitely echo that, and that's what I was going to jump into. Is
Gotcha.
I would say yeah, you beat me to it. Is maybe the revolution or the big disruption that we saw with Bitcoin is this kind of trustlessness. Trust the math. Don't trust me, trust the math. Don't trust me, trust the network. And it is a nice way to do business. And like, I guess what I would say is we had that thousands of years ago when we had gold and silver, and we all just kind of trusted that the stuff is hard to get on this earth, right? You can't just find a bunch of it. So, if someone had gold, you might trust that, someone else will value that gold. And then with basically the fractional reserve system, that all went away, and everything was about, I trust, even if it was a banknote that said it was worth gold, you're trusting that an institution has the gold in their vault. And that's how we've done things for 1,000 years. And now with Bitcoin, only in the past 10 years, can we move back to a trustless system? So, and I think that's what kicked it all off. So that's what I would say is very core.
Yeah, no, can everyone hear me okay?
Yep.
Okay, good. I thought I was having some audio problems earlier. No, that, just to build on what's being said, I think what excites me with DeFi is the autonomy that users have. So you actually own your own money and assets. A bank doesn't own it, you own it. Typically when you deposit money into your bank account, the money is doing the bank is doing all kinds of things with your money. It's lending it out, doing different things. But the concept of DeFi is that you actually own, your assets, and you don't have a right to your assets, which is the relationship that you have with your bank. You actually own the assets. And the other thing too, which I think Haley mentioned, is transparency. So with a bank, you don't have a window into reserves or loan rates for everyone typically, but with open decentralized finance, you do have that window into exactly what the reserves are on a protocol, and everything's a lot more transparent. So those are some principles that I kind of like about DeFi.
Yeah, and just to kind of build on that point again, Matt, the transparency, I mean, it's sort of a core fundamental of the decentralized world. But where I always find super interesting is we kind of draw this line in the sand when we're talking about decentralized and centralized right now. And I think we think about decentralized as these purely on-chain platforms that are entirely operated by smart contracts with decentralized governance and all of this really futuristic stuff that some have some wall clock time now, but a lot of those truly decentralized platforms represent a very small portion of kind of where the dollars and where the actual evolution sits today. Where's really interesting is sort of that bridge back to our existing world and those hybrid models where there are centralized companies that are operating on these decentralized fundamentals of creating what's effectively a decentralized network within their corporate structure. But instead of actually outsourcing all of the governance to the token holders in a purely decentralized way, still retaining some of that governance side, but allowing you to look through them and see their liquidity reserves on chain, like you were mentioning, having their interest rates calculations be algorithmic and transparent. But the way I always think about kind of decentralized networks is I'm sure we've all built models in Excel here. And if you're building a circular Excel model, the last cell and it's not done right, it reps out, it blows up, it creates crazy announcements and crazy values. Or you get a DeFi harvest hack for 20 million bucks. That's sort of the circular model blow up of DeFi. So we need, as we're creating these loops and as we're creating sort of the perfect outsourced and the perfect sort of decentralized logic, there's a role for this strong centralized with the right fundamental role of a circuit breaker, somebody to manage like, well, that's clearly not what we wanted to have here. I think we'll probably talk a lot on this sort of spectrum for a while of where centralization has gone terribly wrong in certain cases today, and where it's still necessary as we're sort of building out the fundamentals of this. But I think it all comes down to the core principles of what we're trying to build, and I think we're all talking in the same direction here.
I think the core principles, Alex, and also I think custody. I think that custody is a big part of decentralization, and you know, certainly in the traditional financial system, and also in some projects claiming to be DeFi, there's a lack of custody, or there's too much custody and not enough consumer custody. And I think that consumer custody is something that we've kind of strayed away from. You know, when we buy a house, we don't put the house in someone else's name, hoping that it comes back to us when the mortgage is paid off. We want to own the house, or we want to have the paper that says that we own the house. With our money, we're quite quick to offer custody to other people, which kind of, you know, by the root, and something that I want to talk about, and something that I think is huge, is talking about the education around kind of financial systems and the way that we can be financially sovereign.
Yeah, one thing too that it seems like accessibility is talked about as a core principle of DeFi, and you know, it's interesting because in a lot of these lending protocols that exist today, you don't need a certain credit score to get credit. There's no income verification checks. All I need is a bit of crypto as collateral, and I can borrow a loan. And you know, right now that's not possible for a lot of people because of poor credit, or you know, their income doesn't meet a certain threshold. So arguably, accessibility is one of the, I think, the key, one of the cool things about DeFi. And it, and I mean, for better or for worse, it's a heck of a lot easier now to borrow, and also to lend your money out too, for higher rates than you would traditionally get, you know, on the market now with a conventional bank account.
So to add to that, you're talking about accessibility. So maybe if we're kind of defining or talking about what's core to DeFi, maybe a permissionless system. I know that would be contentious. There's lots of people who have KYC systems, and you know, they don't want a permissionless system, but potentially being permissionless is a core principle to DeFi, because there's no restrictions to enter the network. You can't be censored just because you live in a different country or you have a different name than somebody else. It's a permissionless system. Your assets are as good as anybody else on the network. That might be a core.
Just one thing to jump in on Matt's point, and I 100% buy into what you're saying about, well, both of you, to what you're saying about permissionless and also non-exclusionary. But I get back to my point that we're sort of in very simple DeFi world right now with these purely decentralized systems. And so in a way, it's revolutionary and incredibly equal that anybody who shows up with $200 of ETH can borrow $100 of US stablecoin. It doesn't matter what race you are. It doesn't matter where you live. It doesn't matter your history. It doesn't matter your criminal status. You know, and in a way, you know, whether you've been in or out of jail. And again, Haley, to your point, that's controversial in many ways, but it's also really, really egalitarian. But on the flip side, it also is exclusionary in its own way, in that you need assets to show up and do that. So if you don't have any assets, then you cannot start and you cannot bootstrap your way into that system. So it's sort of, you know, as we build out the underwriting process and as we build out that fairness process, there's room for people with no assets to show up and get credit based on other things, social credit, reputation, trust. But it's all that point of what is fair, what's transparent, what's algorithmic. How can you algorithmize social credit and allow that to be a collateral within a pool? But that we're just not there yet from a technology perspective. And so it's, you know, I think that's the exact right principle, is whatever you show up with and that's provable and there, and today that's dollars, is your access to the platform, rather than sort of this, you know, more relationship driven miasma that we have in a lot of our centralized financial institutions today. But there's more work to do, and there's more efficiencies to gain in that.
We're in early days, yeah, for sure.
All right, you know, that one really leads well into my next question, because I know we were chatting about this the other day, but there's an assumption out there that if it's financed on blockchain, it automatically makes it like DeFi, which is definitely not the case. And there's really only a few actually proper examples of what DeFi is on blockchain today. So can you give me what you think is like the best example of it, and what's your reasoning behind it?
I think where people go wrong with their assumptions in blockchain is they're misunderstanding what it is. A blockchain is just a database. I think what the blockchain does is it controls, or rather doesn't control, the distribution of that database. What a true blockchain is auditability at any given time. And so I mean, I'll be the first to say it. Bitcoin is probably the best example of this, where we can audit the source of coins, how they're being mined, the rate of supply. All of that is very transparent and verifiable because of the blockchain, and because that blockchain is truly decentralized. There's no one single being or one single person or individual that can walk in and completely change that, which is quite different from other projects. Looking at cryptocurrencies, I mean, the Ethereum kind of debacle that was a few weeks ago was evidence that there is levels of centralization within these DeFi projects. You know, ERC tokens are claimed to be sitting on this decentralized blockchain, which was proved incorrect just a few weeks ago. You look even further and a bit more philosophically, but you look at Litecoin, which shares much of the same principles as Bitcoin, but then Charlie Lee sells out all of his Litecoin, and the price of Litecoin goes tumbling to the ground, because that was centralized around a sentiment of the founder of Litecoin. And so I think that it's important that we realize, you know, what we hold value to, and we hold value to you know, market or individual sentiment, and then also the ability to control. And there are very, very few things in this world that are not controlled by a collective kind of group of individuals, or even one single individual. But that's a really long kind of answer to your question, which is Bitcoin is the best example of a truly decentralized project.
I agree. Like, I think it's tough to, even with the decentralized exchanges that are really popular, it seems to be always someone behind them. Right. So yeah, I mean, what is truly decentralized? What protocol is truly decentralized? I don't know. If you go online, you know, they talk about why Erc protocol might be because of the way the governance tokens were issued initially. I don't know. But at the end of the day, yeah, it always seems to come back to a founder or a group of founders.
It's one of the ironies I found, you know, in DeFi, or, you know, in blockchain, is let's just assume for argument's sake that Ethereum is perfectly centralized.
Okay.
So you get this, you know, you get this story, hey, this decentralized network, anybody can show up with ETH and their money's good. So then what you get people is they'll launch these ERC20 tokens, which is just a smart contract, and that smart contract can be controlled by a single key. And which can be one guy in their basement. They don't even have a business license. You don't even, like, maybe it's a country, you could never bring action against them. And this is kind of being sold as more secure or more decentralized than our current system. I mean, could you imagine if one person had the key to all Suncor stock, and on a whim they could just double the amount of Suncor stock? Like that is a much more secure system than a lot of ERC20 tokens.
It is, but to your point about stocks, if the CEO of Suncor comes out today and says, I do not believe in this business, that stock would absolutely tank. So in a way, you know, all of Suncor stock is really, we're trusting that the CEO of the company believes in the stock. And I mean, look at Pfizer last week. Vaccine announcement, and the CEO sells over half of his stock, and what happened? Stock plummets, because people are like, oh, you know, there's clearly no more gains to be had here. And so even without centralized protocols, that's kind of what I was getting at with the Charlie Lee comment. Even without centralized protocols, there is centralization in founders and in the runners, right?
And it can be scary.
It's so successful is not because of its profits. It's because Elon is just this crazy guy that just like doubles down on absolutely everything, and the market, I think, loves that. So kind of steering away from DeFi at that point.
But look at your corporation, right? In corporate law, a corporation is a legally separate entity, and try, you know, differentiating a corporation from its founders when you have like a two-person company. It's just not possible. Like invariably there's going to be a conflict because the founders are the corporation. I mean, although it's legally separate, it's really hard to pull the founders out of the picture for obvious reasons. And so anyway, maybe that's not a great example, but that kind of just came to mind.
I want to take a slightly different tack on this, and because I do feel like a lot of conversations in this vein get to the point of, okay, well, is it truly decentralized? And I maybe I'm going back to my point previously a little bit, but you're right. Bitcoin, I agree, is largely decentralized. I mean, there's significant power that's in there. But it also it's relatively simple in the grand scheme of things. Like there's not a lot that can be done with it. And so when we're adding functionality and targeting and layering on protocols, layering on logic, layering on the actual business processes that we rely on centralized institutions to run today, when we are trying to make this additional complexity decentralized, I don't think we're there yet to have the technology to do it. So, I think, and Compound maybe is a great example of, Koleya, you were asking for an example. Compound is essentially a fully built out, and I will not call it truly decentralized because there's a small group of people who hold sufficient power to make decisions on it. But it's a fully built out decentralized money market that all logic is transparent. You can see what happens on the blockchain. All money that goes into it is as good as all other money that goes into it. All of these sort of fundamentals that we are talking about. You can see the full loan book on it. You can see the full reserves. You can see all of that stuff. But there is an A16Z backs it. They bought a lot of the early tokens. Any change in the protocol is voted on by token holders. Yes, a lot of those token holders are from the same group and are related to the founders or part of that founder group, but at least what they're voting on is transparent. Now, if there is malicious intent and they go into the back end of the Compound network and say, well, this pool is actually mine now, then that's not necessarily decentralization versus centralization. That's just good old fashioned fraud. And so, I think there's this idea of, okay, well, only the most decentralized gets to be called decentralized. Whereas maybe I take a much more practical approach on this of what are we trying to accomplish here and where are we at with the technology? And then let's layer those two on top of each other. And bad actors are going to act bad. I mean,
which is why I think, like, to your point, if the goal is not total and complete decentralization, because I think you're right. I think logistically that is a very difficult goal to achieve. I think the goal should be rooted in education. I think that right now there is very little being done on a whether it be a government or from a company standpoint to educate kind of why it's actually centralized or why it's not fully decentralized. Could you imagine a DeFi company coming out and saying, yeah, we're about 83% decentralized, but there's 17% within our protocols that's going to be centralized, and that's for these reasons. I have yet to see a company or a project kind of do that, which is kind of, I think, what you're talking about, Alex. And that's why I think, we have to approach this space with a healthy level of skepticism, to be doing our research and for consumers to be looking into, is this real? Because we live in a world, like you noted, no country, no business license, no one kind of telling them the rules or the sandbox that they have to play within. And they're just blatantly lying, which is giving a really, really poor taste to this beautiful DeFi market.
It was a little scary in 2017 when I was looking at all these tokens that were hitting the market, and it was fascinating to see how many people were buying in on these things. And it's like, if you looked at their roadmap, and most of them literally just had, here's my infographic, and if you give me
and a plagiarized white paper.
I am eventually going to have a business and maybe I'll produce a product. But by the way, you don't actually own shares in it. This is basically just illegal crowdfunding. And the amount of people who didn't bother to do research was kind of FOMO'd into it. It was like, wow, education is so critical. And it was one of the reasons why I was like, okay, we need to come up with this like consortium. It's like a safe space where people can come and go, we're going to give you like legitimate information. Do your due diligence, understand these topics. If you're putting your money towards something, you should know what you're putting your money towards. And it's scary, the amount of, people in their basement from God knows where in the world who are like, I'll eventually have
a lot of DeFi. And I think, so one thing just for the sake of the audience is, like, we're talking about decentralized finance and we're probably saying, hey, Bitcoin is like the ultimate and the first, but there is this term DeFi that is more popped up in 2020 that is applied towards, the DAI, state like governance tokens, stable coins, yield farming, kind of yearn finance and sushi swap. And in terms, so that version or that kind of narrowed scope of DeFi, not just saying decentralized finance, I personally believe a lot of it actually completely depends on a lack of information of the users. So when yearn finance can offer you 22% on staking, which that's impossible. The only reason they can offer you that is because they're printing their own token. And there's this imperfect information where if it was perfect information and all users were like, omnipotent, they would all just sell their token and the price would completely adapt to the circulating supply. But you kind of have this, like you keep users in the dark and they don't realize that their yield is just coming from money printing. And that's what this DeFi in 2020 is. For me, it's just running on disinformation. It's hey, we'll give you this yield, but actually we're robbing you to do it. It's yeah.
Mm-hmm. One of the great ironies, I think, is Bitcoin was born out of the financial crisis in 2008. A lot of that was arguably driven by the asset-backed mortgage securities market. So you had mortgages packed up and loans parceled up and sold, sometimes 4 times over, and it was very difficult to trace the ownership chain. Arguably, that's happening right now with DeFi, and a lot of these protocols are doing exactly that. They're taking loans, they're selling them, sometimes 4 times over, and you can't really trace ownership. And we'll see. I mean, if the underlying asset fails, and if the value of some of the tokens that are involved in the protocols fail, it's almost like a house of cards. So in that way, I think it's kind of ironic.
Absolutely.
So one interesting thing. Oh, sorry. Go ahead, Koleya.
No, I'll let you finish up that comment. I was going to get into our next one.
It might lead into more comments, but I think it's really interesting to look at exactly what you're saying from just a pure economics perspective. And let's say I'm a yield generating investor. I show up with $1 of USDC, and currently, I look at a Genesis or something that is relatively institutional, is regulated, is relatively solid, and I'm getting offered 8-9% on my USDC there. And then I'm looking at a Compound or a Yearn or somewhere else, or maybe Compound's the right example, and I'm getting offered 2.5% on my USDC there. And the delta is often these extra tokens that are being generated when you deploy capital into these underlying protocols or these decentralized protocols. And that to me is you're getting to the same economic space of that 8-9% yield, but you're replacing a bunch of the actual value that's being generated from these more economics focused players with speculative value that could end up being 20% yield or could end up being 2% yield that's worth nothing.
I think
so and sorry, just to finalize that point, I think there is a significant amount of legitimate value being created in this space because there's a lot of people with assets that are Bitcoin, Ether, whatever, that want to lend against them or want to borrow against them for cash or stablecoin. And the traditional financial market doesn't recognize those things as assets. So there's this natural demand driver of prices going up, new things being able to be posted as collateral, but there's no natural supply driver because the majority of people coming in with cash are like, whoa, not touching that, don't understand the economics. So there's this discrepancy between supply and demand in just the pure lending economics. And I do think there's legitimate value being created there, but I totally agree with you guys that there's this sort of intensification and circular looping nature of that underlying demand that's being sort of played around in these broken Excel loop models that are a lot of the DeFi platforms today. But I have a strong conviction that the lending and borrowing models are creating real financial value.
Lastly, on just on that point, I think the issue is that those tokens that are being kind of generated and then given out as rewards are advertised as or maybe even just market sentiment is that they will one day be worth 20-30x, but it's basically just a reward system, right? When I get Canadian Tire money, I know what it is. It's good at one place that hopefully will never go out of business. But when I get a token as a thank you for participating in this new project, it's sold to me as hang on to this because this will be worth quite a bit more one day. And then I tell my friend, and my friend doesn't have the ability to get that token for free, so he goes out and buys it. And I think that's the problem. If Canadian Tire started selling, gift cards is arguably the largest Ponzi scheme in the history of the world. But if we effectively kind of treated Canadian Tire dollars in the same way that we treat these tokens, I think we'd have the same kind of problem. And I think that's kind of the problem that's being created is the market sentiment and the lack of education around it.
Yep, that's fair. Or you're entitled to a portion of the profits from the
Yes.
platform with these tokens, which is then a security, which is fine, but it
raises all kinds of legal issues.
A lot of people believe that they own a piece of Uniswap or Sushi because they own the token. Oh, I own a piece. And there on EOS, when I worked there was a DApp that launched, and they were a casino, and they had the exact same model. Like as you gamble, you get this gambling token that gives you a piece of so people thought they were gaining equity in the casino as they were gambling away all their money. It's awful, right? But it's an effective marketing strategy, and we're just seeing this evolution of it. Yeah.
I have a bit of a controversial question, and I'm looking forward to getting all of your perspectives on it. So the beginning of this COVID crisis that we're all currently in, there was a lot of major challenges to getting just like relief funding relatively quickly. And we're now seeing this major push to expedite this adoption of digital currencies. Like, if anyone noticed, like, nobody wants to take your cash anymore, which is interesting. So how do you guys see the central bank and digital currencies creating a more efficient global financial system? Then I'll answer it once. Do you see the central bank creating more efficiencies as they push out for their own digital currency adoption?
I think we already have a Canadian central bank digital currency. It's just called CAD. It's statistically proven that there's not as much paper money as exists in the banking system, and so when a bank says they're creating a digital currency, what they mean is it will be held on a centralized blockchain that the government ultimately controls when it's printed, and controls when it's distributed, and controls who participates, which is just already what we have. We already have that. If you log into your CIBC account and see a $1,000 balance in there, that's just ones and zeros on the CIBC internal database or blockchain that is centrally controlled by them, and the 5 large banks participate in the sharing of that information, but we as a consumer can't audit it. So I have very little hope that a central bank centralized digital currency will do anything good for the consumer, other than it being poorly advertised and miseducated to give people the illusion of something that they can trust.
Yeah, it's still Canadian dollars. I think my concern is there's sensitive personal information that could be exposed with a centralized digital currency model. So the government could potentially, there are privacy issues. They could potentially have more information on your spending habits, et cetera, than they have now. I mean, for the government, I can see it would be a boon, because it would increase the tax revenues. It might disinhibit people from using the coins for illegal purposes. But like, in my mind, it's pretty much the same as like added to what we have now. And also there's these privacy concerns overlaying it. And also, it's code, it could malfunction. Also it's like, if you really get into it, who's holding the key, right? Is there a key with the centralized digital currencies, and is it the state holding the key, or is it the individual? And so I don't know that a lot of those questions have been answered. I guess if you look to China, you maybe see how they're running theirs, but I don't know that we'd want that system here.
I'm gonna use that as a segue. Speaking of China, but I do view these, like, it's kind of a war on freedom. Adam mentioned this concept of like self-sovereignty. And I think that's a big concept in the Bitcoin cryptocurrency world. But for 100 years, if you had cash and you walk into a store, your money's good in that store, and people will take the cash, and that's kind of like freedom, something that we're very used to. And I actually personally believe that how you spend your money is, in today's world, is a bigger form of self-expression than speech, because we all self-censor our words, especially on the internet, but a lot of us don't self-censor our spending. And that's actually a pretty good indicator of who we are and what our values are. Well, a centralized digital currency is just, it's like basically a glass window into that for the government, and they can censor your money. It's a war on cash. You might have a bunch of, you're not able to go into a store and be anonymous anymore. It's Haley, my name's Haley. Haley was in this store on this day and he bought this chocolate bar. And that becomes part of this database. So it's a very scary thing. And I don't think there's a lot of advantage to it. And my last note on it is Christine Lagarde, who I think is, I forget what her position, but I think she is the president of the IMF. She's actually talked about these centralized currencies as a way to counter the threat, her words, of cryptocurrencies. So you have these globalist elite, and they see cryptocurrencies as a threat to them basically being able to pull all the strings, and this is their response. So that's how I view them, and maybe there'll be some efficiency, but I think generally they're going to take our more freedom away from us.
So two points on this, and one, I think, coming back to the concept of fundamentals. If we are truly believing that a government is going to give decentralized governance on how supply and demand of this currency is set, theoretically today it is at arm's length from the government with central banks, which is a very, very theoretical arm's lengthness that I think we're all on the same boat of. And if we're going to be able to have it be censorship resistant, if we're going to be able to actually have decentralized governance over it, if we're going to make it a decentral bank currency that piggybacks on all of the existing rails and has sponsorship by effectively what a government should be, which is a DAO of sorts, then that's a fantastic idea. I mean, we're in theory land here, and that's a fantasy, because it would essentially require governments to give up a ton of their levers of control. But depending on what you view the role of governments as, if it's just a collective action maximizing machine that is designed to make a country better, then you could take out a ton of frictions in your entire country, free up more capital to spend on social issues. You need to redo a whole bunch of your governance plumbing. But the concept of creating the people who set the financial system, sponsoring a complete wholesale move over to blockchain is super interesting. It all comes back down to those fundamentals of how it's actually being used. And if it's being used as a reconsolidation of control mechanism, then it's obviously terrifying. If it's actually being used as, hey, we are the people who are in charge of optimizing the well-being of our citizens overall, and again, fantasy land, then it's really, really exciting. The second point on that, just to your point, Adam, of the fact that we already have a digital dollar of CAD, in a sense we do. In another sense, we have a point that isn't really a dollar. That's the only thing that's really digitized. Like an e-transfer, whenever I say, oh, it's an instantaneous transaction in crypto world, people are like, oh, e-transfers are instantaneous.
Yeah.
Like, no, they're not. They settle when the Bank of Montreal and CIBC, when their mainframe databases settle days later. And even worse than that, they don't really settle until 6 months after that, when they hit your financial statements. And then even worse than that, they don't really settle until a year later when you pay taxes on it at the end of the year. And so this digital transaction that's instant is actually a year-long delayed transaction that has banks as middlemen, the CRA as middlemen, H&R Block as middlemen, Deloitte as middlemen, like all of those institutions that sit in the middle of actually reconciling our transaction. And the fact that blockchain is essentially a mashup of a network and a database, where when I send it, my financial statements update immediately, it gets taxed at source, it actually settles immediately in that actual transaction. I mean, again, we're forecasting the capabilities of the technology, but that is a true digital currency. So again, if it's a sovereign that's willing to take the right fundamental approach and force the adoption of that type of technology, we've just eliminated the entire infrastructure cost of our national financial system. And when we get the financial inclusion or financial exclusion, if we can eliminate trillions of dollars of frictions for accountants and settlement and tech and all of that stuff, that's how you scale down the economic size of a transaction to $1, 50 cents, 25 cents from where it is today.
And I just want to make a one quick aside on Alex's note there in terms of what is DeFi, and he he mentioned this like very long string of these ridiculous amount of middlemen, and that's just kind of how we're like the world has given. And I think, you know, that used to be the case, but I now think part of the reason that we see this big push in DeFi and in Bitcoin is, you know, if you talk to an 18-year-old kid who is on Fortnite, who can buy and trade their own digital assets, and they know what a market is, and they can go in and do a limit order and a market order on this stuff and sell it to anyone in the world. And then they walk into a bank, and, you know, it's basically like, well, we'll hold your money for you, and then we'll charge you to, and it's all these fees. And, you know, this next generation is saying, well, this isn't hard. I know what a marketplace is. I don't need you to hold my hand through this, and I'll just go put my money somewhere else, like, you know, somewhere where it's actually mine and I control it. So in terms of what is DeFi, it just like, I loved Alex's example of this incredibly cumbersome system. And a lot of it is just saying, hey, we don't need this. I don't need this. And you just kind of opt out. So that's just, I just want to make that aside, because I loved Alex's example of this string of middlemen.
That's a great point.
I love the too, Alex, the recognizing assets have value that previously, like new kind of assets have value, whereas before they had no value, right? And that just leads to financial inclusion and has all these ripple effects in the economy and in society. So that, I like that part. I think that part's kind of cool.
All right, so we have about 15 minutes left. So I'm going to ask one more question, and then we're going to try and get to some questions from the audience. If you guys have any questions, put them in the Q&A, and we'll get to them in a few minutes. So my last question to this panel is, so right now, according to the World Bank, there's about 1.7 billion people on the planet that are left out of our traditional finance system. And it's basically keeping them in the cycle of poverty and inability to access any banking services and credit. So how do you guys see decentralized finance being a game changer in the world's unbanked?
Yeah, and that's the whole root of the issue. Is it's just this constant negative feedback loop where, you know, if the banks won't let you in, or the traditional legacy banking system won't let you in, there's just no chance that you're going to be able to succeed, right? If you're let's say you have no address, you're homeless, you can't get a bank account without an address. And if you can't get a bank account, you know, nobody's allowed to pay their employees in cash anymore. So if you can't get a bank account, how do you get paid? And if you can't get paid, how do you get a home? And so it's this brutal negative feedback loop surrounding permissions, which we're told are for our protections and we're told are for regulations. But looking at them logically and looking at them, you know, through the other lens, there's really no reason to exclude somebody from owning assets and from having control over what they have. And I think that the fact that our system is built in a way that has, you know, 1/8 of the population without the quote unquote luxury of having a bank, or of having access to banking instruments is absolutely tragic. And I think that DeFi's kind of permissionless, you know, inclusive systems is the exact opposite of that. With a $25 smartphone and a SIM card, I have access to the world's best money that we've ever seen. And that is something that's truly revolutionary. It doesn't matter what my address is or my race or my gender. It's truly, I think, one of the only forms of inclusivity, because there's no central party deciding who can and who cannot participate.
Yeah, I guess though that the point was mentioned earlier. I mean, the reality is right now, you still need cryptocurrency in some fashion to borrow on these lending protocols, on the DeFi lending protocols. So, you know, it takes I mean, it's easier now to acquire cryptocurrency, but it still takes a little bit of you know, tech savviness and of course you need an internet connection and a phone, which a lot of people don't have, where the internet is highly regulated and monitored. So I mean, I think there's a potential, but right now I don't know that it's a game changer for the poor. Also, I just there are a number of risks right now with DeFi. You know, that could affect all of these people who, you know, underbanked who may use it. So there's no Canadian Deposit Insurance Corporation insurance for your deposits with DeFi. There's the smart contract flaws that could happen. A lot of these protocols are testing in production. So there's audits, but you know, there are flaws and you know, issues happening there. So like people just need to be aware of that. But I mean, I think we're at the start of something that is revolutionary. It's just, I personally don't think we're there yet with the technology and the state of DeFi to bank all of the world's unbanked, because there are some, basic things that you need in order to participate in DeFi right now.
So a couple of points I want to make. And first, probably an unpopular opinion alert, but I really am not a fan of the CDIC or the FDIC for that matter. To Adam's point before about education and governance and all of that, I think it eliminates any form of governance that we have over our banks, because we just go to sleep because some insurance company has our monies back. And it gives banks kind of the full license to get $0 funding and then do whatever they want with it. And I think, that, anyways, whole separate thing aside, but I won't say I view it as a positive, but the lending platforms that are doing this correctly, I view the fact that you need to take responsibility for where your dollars live and actually learn a little bit about it, or do the right level of diligence, or trust the right people to do that diligence for you, as a positive that forces you to have more skin in the game and hold institutions more accountable. But more broadly on the banking the unbanked, I think there's a couple of mechanical and cultural and technological considerations here. So the mechanical piece is sort of what I was talking about before, that ridiculously long, expensive chain of intermediaries. If you can put the technology and solution in place that just cuts all of that out and allows those trillions of dollars that we spend on all of that infrastructure today to just be sort of released back into the system, the cost of opening a bank account, the cost of doing anything just plummets to the floor. And there's one piece of the unbanked piece right now that is like, it's not worth it to the bank to open a bank account for you if you're going to put in $12. And that's because they have all of these infrastructural costs. And that's, that has nothing to do with culture or biases or anything like that. It's just pure economics and size. And fair. Take out a bunch of costs, we lower the amount of dollars that it takes to make a bank account economic. Second, from a cultural perspective, what you were talking about before, Matt, of just this machines, for all of their challenges, are incredibly good at ignoring biases. And whether we program biases into them is an entirely other question. But if a credit underwriting algorithm or a risk analysis algorithm is running properly, and if it's programmed well, or however you want to think about that, again, entirely separate conversation, then anybody can show up who meets these criteria and get credit and get a bank, get access to this financial system. So if I'm in Canada and I'm looking at microfinancing a farm in Kenya, but I don't necessarily know how to go about underwriting that or looking at it. I've got a whole stuff of cultural biases that are flowing through my risk mitigation. Like, I probably need an 80% return to do that. A machine that I again trust the math or understand the algorithm or trust whatever I need to about that says no, this is a good deal at 9%. That even just outsourcing some of the diligence down to an unbiased machine makes me way more likely to flow capital over there, because that machine is connected, because I trust its algorithm and trust its economics. And the last bit to where I think all of this stuff is going in a lot of directions is another point that you made, Matt, of new assets now having value. And I think a really fundamentally amazing use of this technology is the concept that efforts can have value. And efforts that are designed and looked at by a decentralized system of governance, whether it's IoT based, whether it's however else we're measuring efforts. But when we're looking at trading, me tilling a field on a mountain in Chiang Mai, something like that there's no mountain owner that's paying me to do that, but that has value within that ecosystem. And the more we can leverage technology to understand, okay, well, that has made this mountain better, so that is worth value. When you can start translating efforts into zeros and ones that have value on the other side of it, you can break that entire reliance on needing capital to come into the system in order to take capital back out of the system. So there's a whole bunch of ways that, and again, we're forecasting this technology a lot, but those are sort of the fundamentals of how you can get to the unbanked and really bring everybody onto the same level playing field, I think.
Muted. Awesome. All right, so we're going to try and get to a couple of questions. I know we don't have much of everyone's time left, but this has been a really interesting conversation. I know I've definitely learned a lot. And we have quite a few questions, actually. Our first one is, how do you see the future of DeFi in supporting heterogeneous type assets? For example, real estate, bond, credit issues, as opposed to the homogeneous asset support structure that exists today?
So, I mean, I would jump on this one. There's something called NFTs. It's a non-fungible token. And this is like, I would say, DeFi was probably the biggest buzzword in blockchain this year, but probably the second one was NFTs. So there's entire standards around the fact that two tokens, even though they're similar, they're not fungible, right? Even though, it's used a lot in gaming, right? This sword is the same as this sword, but this one's purple, this one's blue. They're not the same. And so you can do that, with real estate, or you can use these NFT technologies. It might be silly where right now it's applied to gaming, but that's kind of always the evolution of technology. But now the same technology that's applied to gaming can be applied to real estate, to all your heterogeneous assets. So I would say that, we'll see the infrastructure built for virtual digital assets on Fortnite, and it will be what we eventually start trading, farmland in Kenya on. It's going to be very similar.
Yeah, I think tradability is one of the principles of DeFi, and that you can trade tokens that represent fractional ownership of real world assets in a way that we've never been able to do before in history. I think there's a lot of value there. I think we're in really early days, and I sometimes I don't know how we're going to do that with a truly decentralized protocol, but it's fascinating, and I do think there's a future there.
Awesome.
Yeah. Sorry, just one more quick point. Or do we need to move on? Let's move on. All good. Okay, so sorry, just last point, I guess. It comes down to exactly that, Matt, the tradability. And the technology that's missing right now is the tokenization of real assets, that linking of something in the real world to a unique digital piece of value that can have programmable logic attached to it. And I think non-fungible tokens are a fantastic use case of this, but the fungibility of digital assets is one of the sort of secret sauces of decentralized platforms that allows liquidity, allows rehypothecation, and allows a lot of the pieces that sort of make them special right now as well. So if you can have a gigantic commercial real estate building and create a loan pool out of $1 billion worth of tokens on that, that's a really cool option as well. Although pledging a sword and borrowing against it is also very cool.
And the final thing on tokenized assets that are real world is this is a big challenge. Like one of the things that's great about, like in the blockchain, everything's in the blockchain world. As soon as you start to say this virtual item represents this physical item, you need trust. Like trust re-enters the situation, because now you need somebody who's keeping track of the virtual ledger and keeping track of the physical assets. And you need to trust that entity or that person. So it's a great, that's, I think, where we want to go with it, where it's going, but it's not going to be DeFi, trustless, permissionless, because at the end of the day, if somebody shows up on your farm and that's your farm, so says the blockchain, who's going to enforce that on the real person? So it's another challenge or nuance.
Totally.
All right, so our next question is from Brett. He asked, can someone, and I think, Matt, this might be a good one for you. Can someone speak to the rumor that the US Treasury in Munich is considering pushing out regulations for non-custodial wallets? That would have a massive shockwave in the community. What impacts could that have in the DeFi world? And would Canadian regulators consider similar centralization and control?
Yeah, that's there's a lot there. I haven't heard that there's both the U.S. Treasury in Munich, so I don't think I can really comment on that.
It's Stephen Mnuchin. It's the name of the U.S.
Yeah, the Treasury, but I don't know that. Yeah, I haven't heard that take, so I don't really know that I'd be able to comment on that specifically. I guess there is a movement afoot, where the Canadian securities regulators are trying to assert jurisdiction with cryptocurrency, what they call trading platforms. They don't want to call them exchanges. There is, I guess, an aspect of centralized control there. I don't think that really answers the question, but Yeah, I mean, I think as regulators in Canada try to assert jurisdiction over these protocols, definitely you're going to see an aspect of centralization. And I think their rationale is safety and maybe even transparency. But yeah, I don't know. That's all I can offer it.
I think that regulating a non-custodial wallet would be very difficult, in the same way that regulating the internet would be difficult without full censorship. I mean, we see full censorship bringing back China in their internet, and everyone knows what's happening over there, and it's no secret. I think that if we in Canada are going to maintain a certain level of freedom, then I think that regulating something that is non-custodial, which for everyone who doesn't know what that means, it means basically that it's owner controlled. So if something's non-custodial, if I'm holding it, it means that I have full control over it, which means on the back end there's no back doors for anyone to kind of come in or see what's happening or take control later on, which largely means it kind of has to be decentralized. And so regulating something that is not controlled by one single being is very, very difficult, much like the internet, without going into full censorship mode. So I hadn't heard that either, Matt. But yeah, that would be very, very intriguing to see kind of how they put that forward. And I think it would be absolutely detrimental to a decentralized kind of safe economy.
So, and I know a little bit about what this question's about, so I'll just speak to it. I believe that basically the Treasury Secretary has asked exchanges like Coinbase to not send to any non-custodial wallets unless they know who owns that wallet. So it's kind of what they're trying to do is they're trying to push a KYC on all wallets, but it would only be exchanges that would need to comply. But it would be very bad for the industry. Which
is again the danger of centralization, right? That's the danger of having like Coinbase. Hopefully and probably won't go broke and take all the funds in custody. But if they won't give you your money, is that any much better? So the money's there, but you can't have it. That's like buying from a custodial exchange. That's the risk that is presented. And we as society, we're very used to giving custody of our funds, but it can be dangerous.
Mm-hmm.
Isn't that sort of the KYC regime that exists right now, though? Like if I through my KYC Coinbase account are saying, hey, send to this wallet, and maybe they're asking for a more legal declaration, but isn't the implication that as part of my terms of service, I'm not doing this on behalf of a third party, and this is my wallet?
I think it's people.
But maybe you're paying me, like maybe you're sending it to my wallet.
Yeah, that's fair.
And they want to know, wait, is that your wallet or is that Haley's wallet? Because we're after the taxes, right? So like, I think that's the play, that's the push. And it's all for it's this war on cash. It's this war on self-sovereignty. Like, no, you can't withdraw your money to an anonymous Bitcoin address that you created 10 minutes ago. All Bitcoin addresses must be like bank accounts. They must be known. We must know who the beneficial owner is. That is scary. And that is an antithesis to DeFi and to Bitcoin and, to the movement.
All right, next question. Okay, this one I find a little fascinating, but is the DeFi not driven from BitConnect strategy? I know. Somewhere in the meeting mentioned about lending and borrowing. If you deposit BT like Bitcoin or Ethereum and you take equal fiat money, is it still borrowing or exchanging possessions?
I think it's still borrowing because you're oftentimes paying it. Lending in my mind is taking something and paying somebody to rent it, right? Lending is just renting. So when you deposit an asset and then receive a loan because of it, that's what we're kind of replacing our trust with. So if I go to the bank and I say I want a mortgage, the bank's going to say, what are you going to give me for that mortgage? And I have to either put up a house or I have to put up the most unbelievable credit score in the history of the world. Both things are tangible to the bank, which is either trust or an asset. And I think that in this case, we're basically mortgaging our Bitcoin when we're using this in a way to kind of have short-term cash, or at least the access to cash while still having exposure to a house, right? If we didn't want to mortgage a house, we don't have to. We can rent a house, or we can save up our money for, you know, a few thousand years and go buy one. But if we, you know, if we want to mortgage it, if we want the luxury, or if we want to own a house today, and have exposure to that house over the next 30 years. And when I say exposure, I mean to the housing market. Then you have to pony up the asset, right? Nobody really owns a house. The bank owns all the houses. We just pay them to rent it, and we're kind of sharing exposure with the bank.
The concept of taking collateral in exchange for a loan is one of the 10 fundamentals of and principles of lending, right? You take out a loan, and the collateral can be a guarantee. You know, it can be personal property, it can be a house via a mortgage. In this case, yeah, I mean, it is some form of crypto. So you're borrowing, but you're putting down a collateral, some asset as collateral. But I think it's important to note that in order to get these decentralized loans, you do need some kind of cryptocurrency to start with. And you have to over collateralize, as I understand it. So you have to, you know, not just a one for one, you actually
Which is no different than our existing mortgage system, right? You have to over collateralize, like
right.
The banks lend up to 80% of a house, or with poor credit, 70% or 60%. Much different than what we saw in the States in 08, of course. But,
it's a different type. Like, I view these lending protocols as very speculative in nature, and it's because of what Matt just mentioned. It's this over collateralization. Like, if I want to buy, you know, a $400,000 house, and like, you know, so if I was a new graduate, I'm in student debt. I mean, I obviously can't buy this house, and these protocols aren't solving that problem. They're not bringing credit to anyone in this situation. If I had enough Bitcoin to buy the house in cash, and I just don't want to sell my Bitcoin, and I want, okay, you hold my Bitcoin, loan me the money, because I want to be exposed to the house and the Bitcoin at the same time. I'm not somebody who needs credit in the sense that I can't afford a roof over my head. I'm just somebody who wants to speculate on two assets at once. I don't need credit. I just want it to speculate. So it's not the pure, like, healthy credit that I would say a mortgage is. It's very speculative. Alex, I'm not saying there's not value. There's value, but you're not like helping a new family like launch themselves in Canada and establish themselves, which I would say a mortgage can do. You're helping someone gamble.
I think though, like, yeah, well, this is getting off topic. I was going to argue about real estate, but we don't need to do that.
Yeah.
whole nother panel, whole nother webinar.
Exactly. Sorry. Oh, sorry.
Over time. If you guys want, we could definitely keep going and answering questions. We still have like 90% of the people here and a bunch more questions to go, but I want to be mindful of anyone's time that, you know, had that hard stop at 12:30. So if you guys want to keep going and answer more, we can totally keep it. And if not, we can end it for today.
Can I just have one more comment on the lending protocols and platforms? Sorry, just to wrap up on that maybe. Yeah, I agree with you to a certain extent, Haley, although I think that categorizes Bitcoin holders in kind of a negative light, as there's I recognize that, but there's a lot of small businesses who are in the crypto world, hold a bunch of Bitcoin, need fiat to pay their employees, don't want to go to a bank, or don't want to go venture capital, or don't want to go traditional venture debt route, which are all 15, 17, 18%, will happily pledge their Bitcoin into a lending platform in order to gain access to fiat capital to cover their more traditional expenses. But I'm also with you that, you know, the majority of the people who are in this space are approaching it from a financial perspective. So whether it's speculation, which is a valid market and price discovery mechanism, or whether it's hedging, shorting, price discovery, all of those more traditionally valid reasons for exploring leverage, all of that is kind of the real piece of the lending side. Just the last bit on collateral and usage as well. I think what's really interesting about this space, and especially in the decentralized world, is that when you put your, let's use ETH for an example, when you put your $200 of ETH into Compound as collateral to earn, dollars, to take out dollars back, you're actually earning interest on your ETH in the same way as if you just showed up with ETH to lend it into the pool. So it's this construct where when you're committing assets to a pool, it's being relent out. So like, and it's actually, in some ways it looks, okay, well, that's insane. It's rehypothecation, which has a really terrible reputation in the industry. But because every dollar that comes out of the pool is algorithmically controlled and new dollars need to come in, and everything is sort of contained within this pool that has very specific rules, it actually is way more efficient. Instead of just taking assets and locking them in a vault, if you can control the entire leverage ratio of the pool, you can create way more liquidity, way higher yields, and way lower borrow costs for everybody who's accessing that. But it relies on fungibility of assets. It relies on a communal trust of the pool overall, and it relies on some of these more decentralized fundamentals. But banks aren't re-lending out your house, so in a way that's safer. But it also, if they were relending out your house and passing that cost on to you, your cost of your mortgage would be lower. So if there's a way to do that safely, then do you want to do that? Maybe, maybe not. It's all about transparency, efficiency, and really the use of the technology to make these decisions for you instead of somebody else making the decision for you.
Bingo.
Mm-hmm.
All right, so I guess we're going to keep going. We'll have another question. So there was a discussion on the importance of permissionless systems, which is great to make sure that people are not kept out based on race, gender, economic status. But what about keeping out bad actors, i.e. criminals or countries with sanctions, North Korea, Iran, etc.?
I think I feel very passionately about this one. We as a society have to be better at that. I think that if everybody unanimously cared super deeply about preventing bad actors in X category, if we all did due diligence, we refused to do business with them, etc., then it would as a society be a lot, I think, more effective than regulating out. Because I think the problem with regulation is that you punish a large subset of people for a very, very small reward. We don't stop people from driving after 9 p.m. because the majority of drunk drivers and drunk driving accidents happen after 9 p.m. But that would be, keeping people out of the financial system to keep the small percentage of terrorist financiers and quote unquote bad actors in play is that same kind of mindset. Well, majority of people doing this action after this time have this consequence. Let's just stop everyone from doing that. That is a very, very lazy model that we are quite comfortable accepting because we're told it's for our own good. But in return, what we get is a lack of innovation, and we really stifle the ability for the good people, for the good actors to proceed. So by stopping bad, you're also stopping good. I like to believe that we live in a world where good will overpower, and the passion to do good will forever kind of outweigh somebody's passion or interest in doing bad. And if we truly believe that as a society and take ownership unto ourselves, where it becomes our problem and not somebody else's problem to solve, I think that we'd be a lot further along as a society and towards inclusion.
I think if the reality is in Canada now, if you want to start a DeFi protocol or a platform, you're probably going to be you're going to be accepting or dealing and dealing in virtual currency, which means right now you're going to have to register as a money service business with FinTech, which means you're going to have a comprehensive AML, KYC compliance program. You're going to have reporting requirements, attempted suspicious transaction, record keeping. Right now there's legislation to keep the bad guys out already. So I think the DeFi platforms in Canada would be otherwise subject to those kind of restrictions, and it's not meant, to keep everyone out. It's, you're simply required legally to take people's ID and to report on certain things.
I mean, theoretically, that should apply to Compound as well, because they're based out of Palo Alto.
It should.
They should
probably be getting a banking license actually at some point, but that's another
panel.
An in-house lawyer who I follow on Twitter. He's extremely intelligent. So they know that, obviously.
We're going to be having lots and lots of these engaging conversations all throughout next year. So we'll definitely have some specifically just on like securities and all these wonderful things and AML. All right, so we have another question, and this is from a gentleman named Frank. He's like, so what Canadian companies are helping to get Southeast Asia and Africa banked? We're global leaders, and if we have a company or two trying to solve that, we should support it. Do we know of any?
I think, and Frank, I think your heart's in the right place. I think the execution is where it's lacking. It shouldn't be a company. It should be something more decentralized than that. We should be pushing education, and maybe that's what you mean is having a company pushing education or allowing for. But as soon as you have a company doing that, that's for profit or relying on somebody's profitability to be able to do that, versus a project or versus a set of protocols, which means a lot of volunteer time, and it means it has to be a passion for people. I don't know of any projects that would effectively solve the problem, not just offer a band-aid, but actually solve the problem to get the unbanked people banked, other than Bitcoin. I think that not to beat this Bitcoin drum, although I'm going to very happily beat the Bitcoin drum, that the tagline being Bitcoin solves this is quite literally true here. We don't need a company to be in there. People in the unbanked countries have just as much access to Bitcoin as you or I do in a fundamental world. Entering that system, of course, is more difficult. But once they're in the system, that's kind of where they get to shine and where their access to money becomes true, and that's where they become sovereign.
Totally agree with that. For one company that is sort of tackling that space, but is also in this space, and several of us may know them, Ledn.io is they're centralized lending, but in the Bitcoin space, with a heavy focus on Latin America and particularly Venezuela. So they are focusing a lot on increasing access to credit using the Bitcoin network based on in emerging markets and particularly challenging economic places in South America. But I totally agree with your assessment, Adam, that it does need to be a grassroots movement. It doesn't necessarily need to be a company. But at the same time, if companies are built on the right fundamentals and they can do that from that perspective, which I know and like the Ledn guys a lot, then there's room for corporates to play their role in that as well.
Awesome. So we do have another question. So could panelists recommend somewhere, either books, websites, for blockchain, cryptocurrency, for DeFi novices to learn some of the basics on these topics, preferably from a Canadian perspective? Book I love and I recommend a lot. The gentleman resides in Canada currently, but I would recommend the Bitcoin Standard by Saifedean. It's a good understanding of that Bitcoin and blockchain as a starter. What do you guys think? What's some other websites and resources?
Mine.
I would say, like, I don't know, you could go on CoinDesk or Cointelegraph, and they've kind of compiled some good resources on just the basics of the topics we've been talking about.
I like Andrea. Like, I think for a high level, I think Andreas Antonopoulos. I know it's a mouthful, but if you just look up Andreas Bitcoin, if you Google that, you'll be led to him. I think he does some really good basic content. He's written a book on Ethereum and Bitcoin, and he has a lot of good YouTube stuff that, like, I think they're quite high quality in terms of bite-sized. Sit down, listen to a YouTube or watch a YouTube video, get on with your day. If you do that once a week or twice a week, you'll start catching up on blockchain and Bitcoin pretty fast. That's my approach. Maybe you're a reader, and then I suggest a book.
So Michael Casey's book, The Age of Cryptocurrency, I thoroughly enjoy, as do, now he's in charge of content at CoinDesk. The other one that I'd recommend that isn't strictly to do with Bitcoin or blockchain, but it is one of the ways that I've kind of bootstrap my worldview to a certain extent, that is heavily powered by blockchain and the logical conclusion of these technologies, is Yuval Harari, the not Sapiens or Homo Deus, but his current one that's focused on today, 21 Lessons for the 21st Century. there's a lot that goes deep into societal issues and the technological underpinnings of potential solutions for them. So it's a little bit more tangential, but I found it super helpful to just contextualize the technology and where it could fit into some solutions to some of the bigger things that we're constantly wrestling with.
There's one I would recommend, and again, this isn't like based on Bitcoin or blockchain, but the purpose of decentralized finance is creating that level of self-sovereignty, being able to be like your own sovereign like banking system, your own sovereign individual. So there is a book called The Sovereign Individual. It was written by two economists. It was written and published, I think, back in 1990. I find that an absolutely fundamental read for anyone who's actually interested in sovereignty, basically, and not so much allowing the government and nanny state to utterly control everything. So recommend that book, Bitcoin Standard, some of the other ones that we're mentioning here. If you're into Bitcoin, I think you'll really enjoy that particular read.
Can I toot my own horn for 1 second? I'm writing an article for CoinDesk for the upcoming 2020 year in review that's all about the open lending space and its growth and maturation and how it grew up this year. So that should be coming out in December sometime, and I'm not sure how I'll get the link to you, but it's sort of a deep dive into the space that covers a lot of what we talked about today.
Well, Alex, share it with us, and we're happy to share that out with our network. So sign up for our newsletter, guys. We will make sure that we post Alex's blog article in the next one when it goes out.
CoinDesk is good. I've got a few articles on CoinDesk as well, so
yeah,
to toot my horn, but cool.
I'm going to use this as a natural jump off. I got to get going here for the rest of the day. So thanks everyone thanks Koleya for setting this up. Love the CBC, love what it's doing, this panel. Everyone, I love these guys. These guys are awesome, and really appreciate you kind of hooking all this up. And thanks everyone for listening and watching too.
Agreed. Thanks, Adam.